Inflation is an economic term that often makes headline, but its impact on various investment avenues can sometimes be a bit confusing. When it comes to real estate, inflation can have both positive and negative effects. So understanding these effects can help investors make informed decisions, optimize their portfolio. So let's look at how inflation affects real estate investment in an easy to understand and in a well-informed way. First, let's start with what is inflation. So before we look at this impact, let's see what is inflation. So inflation refers to the general increase in prices of goods and services over time. It reduces the purchasing power of money, meaning you need more money to buy the same item as time goes by. So now let's look at the positive effects of inflation on real estate. One, appreciation of property values. So real estate tends to rise with inflation. The price of real estate always goes up when inflation hits the economy. So that's one thing that is sure. Number two, increased rental income. So with real estate, once you have a property as an investor, once real estate hits, you are definite to increase your rental income to your tenant. And guess what? They have no option to pay. So as the cost of living rises, landlords can increase rent prices. This means your rental properties can generate more income over time, helping you keep pace with inflation and even outpace it. So the third one is debt benefits. Inflation can reduce the rise of value of debt. If you have a fixed rate mortgage, the amount you owe pays the same, but the real value of that debt decreases as inflation rises, especially if you are paying back your loan with a cheaper dollars, which is advantageous for borrowers. That's for inflation. So now let's look at the negative effects of inflation on real estate investment. Number one, high operating costs. Inflation can increase property management and maintenance costs. So the cost of services, materials, labor for property maintenance will rise with inflation. This can eat into your rental income and reduce your overall profitability if not managed properly. Number two is increased rate increase. Inflation can often lead to higher interest rates. So to combat inflation, central banks might increase interest rates. High interest rates mean more expensive borrowing costs for new real estate investments, which can affect your purchasing power and reduce your potential returns. Number three is economic uncertainty. High inflation can lead to economic instability. So if inflation becomes too high, it can cause economic instability and reduce customer confidence. This can impact the real estate market, making it more challenging to sell properties or maintain high occupancy rates. So now, let's look at how mitigation affects inflation too. Long-term fixed rates mortgages, which is number one. So locking in long-term fixed rate mortgages helps. This strategy ensures that your mortgage payments remain constant, even if interest rates rise due to inflation. Number two, regular rent adjustment. Adjust rent regularly to keep up with inflation. As a landlord, by increasing rent in line with inflation can maintain your property income potential. So number three is diversification. Diversify your real estate portfolio. Invest in different types of real estate, whether residential, commercial, or industrial in various locations. Diversification helps spread risk and protect you against local economic fluctuations. The fourth one is efficiency property management. Implement efficient property management practices. Regular maintenance, cost-effective management can help control operating expenses. This includes negotiating long-term service contracts and investing in energy-efficient upgrades. So the fifth one is stay informed. Keep up with economic trends and market conditions. Staying informed about inflation trends, economic policies can help anticipate changes and make proactive investment decisions. So inflation is a double-edged sword for real estate investors. While it can drive property values and rental income highs, it also would bring challenges like increased operating costs and interest rates. By understanding these dynamics and implementing smart strategies, you can turn inflation into an ally of real estate investment. So stay informed, Be proactive, make decisions that align with both current market conditions and your long-term investment goals. So, thanks guys for watching. Give the video a thumbs up to help YouTube algorithm. Subscribe to the channel, and we'll see you on the next one. Thanks and bye for now.